Hi everybody, Marco Carvalho here from businesscreditblogger.com. Today's video we're going to talk about how to get business lines of credit. I'm really excited about this presentation because what you're going to get from this video is we're going to go over the two types of major business lines of credit that you're going to hear about. There's traditional business lines of credit and non-traditional business lines of credit. More importantly, at the end of this video, you're going to find out how to actually qualify for them and where to apply for them. Okay, so let's get started. First and foremost, what I'd like to do is talk to you about what exactly is a business line of credit. A business line of credit is a revolving credit product. It's issued by a bank or an alternative lender, actually, that allows you to draw funds up to an entire credit limit issued. Now, you could borrow money against the line whenever you need it. Now, there's two types of lines of credit for businesses. There's unsecured and there's secured. In this particular video, we're going to be talking about strictly unsecured business lines of credit, which means that you don't have to pledge any type of collateral, no equity in property that you have or anything. This is completely unsecured lines of credit for the business. Now, you can repay your balance with these types of lines of credit in full, or you can carry a minimum monthly payment. So when you draw on the line of credit, you have a small minimum monthly payment, so it's a much easier debt for you to service as a business compared to getting a business loan or a loan, which basically you have a fixed monthly payment. So that's why revolving lines of credit, business lines of credit are really convenient, because it's basically money that's there when you need it. If you don't need it, then you don't need to use it. And you could borrow against your line of credit over and over again. So as you use it and you pay down your principal, the credit becomes immediately available for you to use again. Now, you can access your lines of credit for the business in a variety of ways, but it really depends on the type of lines of credit that you get for the business. So one of the most common one is your non-traditional business line of credit, which is in the form of a business credit card. Banks will issue a credit card in the name of the business, which allows you to use it for purchases. Then the more traditional business line of credit is where you actually have a line of credit at the actual bank. And the way to access it is through checks that they provide you. You could write a check out to draw on the line, or you could access it by phone, online, and wire transfer, etc. So that's the other types of ways you can access your line of credit if you go with the traditional route. There's two major differences between the traditional business line of credit and the non-traditional business line of credit. The traditional business line of credit is issued by a bank, and it's a line of credit where you have check writing privileges, etc. The non-traditional is more of the flexible business credit cards. Two major differences though. For the traditional, it's traditional, so it requires much more documentation as a business. So you have to be able to verify the income for the business. We're going to get into that in a minute. Why business credit cards non-traditional is so popular is because it's so simple to qualify. It's a stated income program, meaning there's no docs required. You don't have to provide any documentation for the business, no financials, no tax returns. It's strictly stated income. It's really based off the strength of your personal credit. You'll see on the bottom of this presentation, if you want to learn more as far as how to pre-qualify, businesscreditbuilders.org/business-lines-of-credit. Now, what are the benefits for getting a business line of credit? Obviously, it's the flexibility. You as a business owner have the ability to draw on the funds when you need it. You can pay the balance back in full every single month, so you have no interest you have to worry about, or you can carry a balance with a minimum monthly payment. You can access the cash and credit whenever you need it, so it's great if you have a short business time period, you need working capital. One of the things I love about it, which most people don't talk about, is through our program is we set you up with several different banks. So you get several different types of lines of credit, which allows you as a business to establish multiple banking relationships. And that's the most important thing to realize. The mistake that business owners make is they tie up their line of credit with one institution or one business credit card. And what that means, it doesn't allow banks to compete for your business. It doesn't give your business the opportunity to build multiple relationships. You get additional credit offers, and also strengthens your business credit file, which we'll get into that in a minute. And you have the potential for credit limit increases. There's no restrictions on how you can use the funds when you have these types of lines of credit, which is really exciting because some different types of products like your SBA loans, you're restricted to how you actually use the money. And this is what I love about it, is actually builds up your business credit report. So when you get business credit cards through our program, they only report to the business credit agencies. They don't report to personal credit. The traditional business lines of credit also report to the business credit agencies. So this allows you as a business to build your company's credit worthiness. And as you build up your credit worthiness, what happens is banks and lenders, suppliers and vendors will be able to check your company's credit in the future, as opposed to always relying on your personal credit for the credit worthiness to see how much credit they want to extend to you. Now, this also protects your personal credit. So with our UBF program, business credit cards, we get you 4 to 5 cards in the company's name. It does not show up on your personal credit. So that's really exciting. Now, let me go over the differences as far as what you'll get with each of our programs and depending on if you qualify with each of the programs. Let's talk about the first one. The first one is your traditional business lines of credit, where you'll see on the screen here, 25 to 200,000 in combined credit limits. So at the end of the day, what we do is we set you up. We have over 400 banks, credit unions, and lenders in our network. So when we do a review on your company and your credit, we're able to dictate which banks in our network will be most willing to extend the lines of credit to your company. You'll end up with 3 to 4 unsecured business lines of credit. Each bank typically issues up to 50,000. They don't go higher than that. So your combined credit limits can go as high as up to 200,000. Interest rates for traditional business lines of credit are 7 to 12%. And keep in mind, these are completely unsecured. Minimum monthly payments are 2.5 to 5%. So it's a little bit higher than your credit cards. So if you draw on your line of credit, on the traditional line, your minimum monthly payment is going to run 2.5 to 5% of the outstanding balance. And this also reports only to business credit. So this helps protect your personal credit. And now what you'll get with the business credit card program that we have is we'll set you up with 4 to 5 business credit cards issued in your company's name. And the best part about it is that it reports only to business credit. So this also protects your personal credit. It's just much easier to qualify compared to traditional. I'll get into that in a minute. You're looking at 25 to up to 150,000 in combined credit limits. Each of the cards come with a 0% intro APR for anywhere from 6 to 15 months. After that, your traditional interest rates on the cards, the annual rates are going to range anywhere from 9.9 to 19.9. Typically, though, with our clients, they're landing around 9.9% to as high as 15%. Okay, minimum monthly payments 1 to 2%. A great way to service your debt. Very low minimum monthly payments, and it also reports only to the business credit agencies. Now, what's required to qualify for traditional business lines of credit compared to non-traditional, which is your business credit cards? And this is what's required through our programs. Business lines of credit, verifiable income. This is the key. As a business, your company has to be able to show a net income of at least $2,000 a month. So how do you verify that net income is through tax returns. Excuse me. So you'll have to provide 2 years of tax returns for the business. So your tax returns have to show that the business netted over $24,000 a year in net income. Now, why does it have to show that? Well, what happens most of the times is businesses that have great gross income, they have a lot of revenue, but there's a lot of expenses, a lot of deductions. But at the end of the year, let's say the business shows a very little profit or no profit at all. Let's say the business took a loss. In the bank size, they see that the company, all the revenue comes in, goes out, so there's no additional funds available to be able to pay if you draw on that line of credit. And that's why many small businesses cannot qualify for your traditional business lines of credit because their tax returns simply don't show that the company has that extra net income to be able to support a line of credit. So if your business is profitable, though, then it can show that, then that's what they look for. You have to have also your personal credit, 680 FICO score is good personal credit. Like I said, you can access your traditional line of credit through phone, online, or access checks. What's exciting about traditional lines of credit for the business is the fact that you can draw up to 100% cash on the line of credit. There's no restrictions there. So if you have, let's say, a $50,000 line of credit issued by the bank, you can draw $50,000 in cash up to your credit limit. Okay, so that's your traditional. Let's talk about your non-traditional. This is why if you have a business, let's say, that brings in $250,000 a year, but let's say there's really no net profits. Let's say you take a loss because you have lots of expenses, etc., or you have a very minimum profit. Let's say it's $10,000 net profit at the end of the year. Then you're gonna have to go stated income, which is business credit cards. Because business credit cards requires no documentation. You don't have to verify income. You don't have to provide any tax returns, no financials. It does require a personal credit check. You have to have a 680 or higher FICO score. But it's a very simple program. I mean, it's streamlined. So that's why the business credit card program is such a popular program. The only real difference between a traditional and non-traditional is the ability it's easier to get cash out of a traditional line than business credit cards. You can still get cash from business credit cards through cash advances, and you can avoid those high interest rates by doing the balance transfer strategy. We'll be happy to show you how that works. So don't think that business credit cards can't get you the cash you need, because they can. You just have to be more creative about how to balance transfer to avoid high interest rates. Okay, so why should you get business lines of credit as a business owner, or let's say you're a real estate investor? Working capital, it's access to cash and credit when you need it. Unfortunately, a lot of business owners wait until they get a crunch, or they wait till times are slow to actually say, I need access to funding. The best time to get business lines of credit, or whether it's traditional or non-traditional, is when you don't need the money, okay? Because that's when banks are actually more willing to give you the money, is when you actually don't need it. So when your financials are strong, or your credit's really strong, or you have great solid revenues, great net income, that's the time to set it up. You don't want to go searching for lines of credit and funding when you really need it, when times are tough or your credit's taking a hit from other financial issues. That's when banks are restrictive, and they're less likely to give you these types of unsecured lines of credit. So you can use this for starting a new business. Now, as a new business, you're going to want to go for business credit cards. Getting a traditional business line of credit as a startup, banks want to see you 2 years or more in business for a traditional business line of credit. So you want to go with stated income for as far as which is business credit cards. If you're a startup, you could definitely get those business credit cards if you have good personal credit. Now, you can use your business lines of credit for new equipment, add your current location, invest in real estate. Now, this is the one I want to really point this out. You want to check our last video we did on personal bank lines of credit if you're a real estate investor, because I get a lot of real estate investors who have, let's say, an LLC or a corporation, and they want a traditional business line of credit. And banks will not give real estate companies traditional business lines of credit because they're classified as high-risk businesses or industries. So the only way you'll get that type of business line of credit for a real estate company is if you secure it. You're going to have to provide collateral, which is equity in investment properties that your business owns. So if you don't have any investment properties that have equity in them, a sizable equity, and you can't collateralize the line of credit with the bank, you're going to have to go with an unsecured traditional personal line of credit. And that's what I talked about in my previous video, is how to get personal bank lines of credit. Okay, so I just want to make sure you understand it if you're a real estate investor. Using business credit cards as a real estate investor is a great way for you to get access to cash, build your business credit, protect your personal credit. So you definitely want to take advantage of that program if you're a real estate investor. Now, you can use your business lines of credit to launch an advertising campaign, invest in other projects, purchase materials or inventory that you need. So these are a lot of great uses to having business lines of credit. How do you pre-qualify? That's the beauty of our pre-qualification programs, because we're not going to do a hard pull on your credit. A lot of lenders out there all day will say, yeah, we could do funding for you, but what do they want to do? They want to pull your credit report, which causes a hard inquiry. Every time you get a hard inquiry, what does that do? That lessens your chances of getting funding, because banks look at excessive inquiries as a business owner or individual that's desperate for funding. They're looking everywhere for funding. So we don't want that to happen to you. So what we do different than everyone else is we pre-qualify you. We allow you to furnish us your tri-merge credit report. So we're not pulling your credit to do a pre-qual. Our underwriters will then review your tri-merge report, which is obviously a snapshot of where you are personally. We also, if you want to look for the traditional business lines of credit, then you need to fill out a business finance application, which we can provide to you. But once you get, the first thing you're going to want to do is get a tri-merge report, because you're going to have to provide that for both types of funding programs. Once you get your tri-merge report, it only costs $1. You go to businessfundingengine.procredit.com, download the report in PDF format. Once you have that tri-merge report downloaded, then you're going to go to the pre-qualification form, which is businesscreditbuilders.org/pre-qualification. That's a simple online form. You should provide your company information. You select which funding programs you're interested in. And then you also upload your report. It's a completely secured site, so your information is protected. It'll allow us 24 to 48 hours to do a review. Now, if you do select the traditional business lines of credit box on there, we're also going to send you an application to fill out because we need additional information on the business for the traditional business lines of credit. If you're strictly wanting the stated business credit card program, all you need is your tri-merge report. Okay, so our pre-calls take 24 to 48 hours. It's absolutely free for us to do a review. It doesn't cost you anything and there's no obligation. You'll get a call from me within 24 to 48 hours after our underwriters complete the review, and we'll go over the funding projections with you. We'll answer any questions that you have, and from there, if you want to move forward with the funding projections, we'll then submit an application to you to submit and complete. Provide us with the necessary information. We assign you your own processor, and your funding takes about 14 to 20 days. So that's how fast this program is. So that if you're looking, whether it's for traditional business lines of credit or non-traditional, which is business credit cards that only report to the business credit reporting agencies, definitely check us out, businesscreditbuilders.org/prequalification. With that, if you really enjoyed this video, click like and subscribe. Click the subscribe button because you'll get more videos like this that'll help teach you how to get the funding you need for your business, whether you're a startup, existing business, or real estate investors. And more importantly, we're going to show you how to stop using putting your personal credit risk and start building up the credit worthiness of your business so you get access to all the capital and credit you need to grow your business. With that, make it a great day. We'll talk to you real soon.